Once upon a time, human works hard, very hard, and they studied till end of their death. Life was very simple. People make quick decisions, like two people, and they will ask, let's make the decision quickly, as long as other people don't jump in. And even if they make the decisions, afterwards they can decide what was the process to hire a cat, even if there was no one to object or to inquire what was the decision made. That was up to the management. Accountants and auditors always fight with each other. Whenever you issue an audit report, accountants are going to die and kill your throat because they don't agree with the auditor's perspective. That was always the case and still is the case. It like continued like that 12,000 years. Auditor sees accountants as a nerd and the auditor sees accountants as backwards, Stone Age people. But this Stone Age ended. But how did it end? Stone Age didn't end it because of lack of stones. It started all about in 70s with the digital revolution. The life on Earth exploded in both good ways and bad ways. There has been a rush of technologies. Agri-technology, robotic technology, energy technology, communication technology. Then comes the era of fintech revolution, and the rise of the fintech. That gives financial crisis more influence to millennium towards the fintech revolution. Now, the industry has changed with this revolution. The optimization, automation, robotization, and digitalization have changed the game and redefined the rules of the game. The future has started already yesterday. So we as a finance and audit professional, we need to digitally transform ourselves. Every industrial revolution was driven by different automation. The steam engine began the first industrial revolution. The previous industrial revolution was driven by factory machines and fossil fuels. Whereas the ongoing automation revolution is based on data-driven artificial intelligence and blockchain technology. Just a minute. Just a minute. So what will the workforce look like in 30 years? The first impact that has impact on auditors and accountants was the artificial intelligence. Initially, they have a view that a robot is after my job. That was seen as a threat. Will they take our children's job? Then what should I do? Most people think, why study too much? After all, this robot is going to take all the credit. If he had the qualification, even then he's the one who's doing all the jobs. Then there is a discussion that who's the smartest of all. Maybe AI will think that he is the smartest and the human will think that they are the smartest. But then there came a acceptance era. What was considered new and disruptive has become the norm and prerequisite for all players. But this doesn't mean that this is the end of finance and audit profession. Rather, it will drive evolution of finance and audit professionals. Science fiction has become a science fact. With these digital innovations in Bitcoin, big data, blockchain, artificial intelligence, now the role of finance and audit professional has been changed. Now it is important that we understand and we are aware of the evolving technology, tools, and systems, and understand how they might affect our organizations. Today is the digital information age. There is a large and complicated data sets, structured and unstructured. How will big data impact auditor and accountants? Big data is just like a crude oil, and crude oil without any meaning is useless. So the smart ones will be those who will utilize these digital technologies. Now, big data will help auditors in accounting, like you can have a deeper analysis. Big data allows processing massive amounts of financial data, uncovering anomalies. You can use manual methods instead of that. Sample size boost, auditors can analyze the entire data set instead of relying on small sample sizes. It will help you in automation. Repetitive tasks like data gathering and reconciliation can be automated. Real-time insight, continuous monitoring of financial data allows for quicker detection, proactive task management, improved efficiency. Overall, big data streamlines the audit process, reducing the time and complexities. Now, if data is the new oil, artificial intelligence is the new electricity. So this Terminator, the AI, will not take your job because you have to reinvent your role from workforce of the future. You have to reinvent yourself, transform from being counter role to strategic role. Because computers are for the answers and humans are for the questions. You need to perform tasks that have to do with logic, science, mathematics, creativity, and art. And then the machine will do the mathematical side and you will do the creativity side. That's a skill shift. Now, one of the tool which is very common nowadays is the chat GPT. That is a generative AI, which CEOs, CFO, finance professionals, and auditors all are using in their daily routine of work. So what is a generative AI? Generative AI is a typical artificial intelligence that can create new data such as images, text, music. ChatGPT-3 is a classic example language model developed by OpenAI that can write text that is almost indistinguishable from an human writing. For CFOs and CEOs, it can help you in strategic planning, generate financial forecasts, simulation based on market trend, enabling data-driven decision-making, risk management, identify and assess potential financial risk with greater accuracy through AI-powered scenario planning. For finance professionals, it can enhance reporting, automate report generation with real-time data and insight, saving time and improved efficiency. It can help you in fraud detection, analyze vast amount of financial data to uncover anomalies and suspicious activity, reducing fraud risk. For auditors, it will help you in audit automation, utilize AI to perform routine audit tasks, freeing up human auditor for high-level analysis and judgment. In data analysis, you can gain deeper insight from complex financial data sets through AI-powered data visualization and analysis. But generative AI also have some risk. Number one is the data security and privacy. You need to robust security measures are need to be taken to protect sensitive data. Ethical implications is there. Transparency and fairness are crucial in AI-powered financial processes. There should be a regulatory compliance. AI implementation must be compliant with financial regulations. There's a cybersecurity aspect also. Strong cybersecurity measures are needed to protect against AI-related threats. And then algorithm biasness. Measures are needed to mitigate bias and ensure fair decision making. What about the blockchain impact? This is the very major. After AI, the impact will be from blockchain. And this is going to be a game changer for all auditors. As we say, the traditional audit will die with the implementation of AI and blockchain. No matter what the context, there is a strong possibility that the blockchain will affect your organization. The only question is that when. The main features of blockchain, that is a decentralized technology, it's immutable public ledger, enhanced security, and faster settlement that makes it unmanipulatable. There are smart contracts. This is the basis of blockchain. Smart contracts are blockchain contracts or digital contracts that are self-executing digital agreements within the blockchain environment, and the terms between the buyer and seller are written in the computer code. So a smart contract is evoked automatically once the condition of the agreements are met, eliminating the need of intermediaries. These codes make the agreement trackable and irreversible. There are two main features that make blockchain unmutable, that is real time. Now, from the auditor's perspective, gone are the days when auditors had to wait for it and for the end of year or earn to carry out their audit. Because of the blockchain technology, it is now possible to perform an audit whenever it is required. This will improve pace of financial reporting and auditing. The second feature is the immutability and transparency. All the information is stored as a block and every block is associated with others. Anyone trying to change one block needs to alter the associated blocks, which becomes a daunting task for the hacker. Here, the auditors spend a lot of time in verification of the transaction trail to ensure there is a sufficient evidence and information is transparent. With use of blockchain, it will save their time that traditionally goes in manual auditing and detailed analysis. That time can be utilized in formulating more strategic work and delivering future business value. But with all new technologies, there are risks as well. Similarly, with blockchain, there is a new world of digital risk. Number one is that there is no way to reverse a transaction. If a user accidentally or deliberately transfer an amount in the form of digital currency to wrong or unauthorized address, recipient, account, there is currently no way to reverse the transaction. To avoid such situation, auditors are required to access effective automated control. General information technology controls related to blockchain environment are in place to validate transactions before they are executed. Secondly, there is no reporting authority. If an entity experiences a phishing attack, there is no central authority to report any accident. Since in blockchain, there is no central administration. This situation can translate into a risk of fraud. When faced with such risk, auditors will be expected to determine whether internal controls to prevent and detect phishing attacks are operating effectively. As per a survey, Deloitte survey, it finds that 74% of accounting and auditing firms are currently using blockchain audit softwares. Like EY has their blockchain chain analyzer tool. PwC is using blockchain validation software. KPMG is using KPMG Chain Fusion. So what auditors need to do is that they have to stay abreast of recent development in this space, to consider how to tailor audit procedures, to take advantage of blockchain benefits, as well as address incremental risk. Now coming to the way forward, no matter what industry you are in, no matter how fit you are as an accountant or as an audit professional, the more you learn, the more powerful you are. It is not the strongest of the species that survive, nor the most intelligent, but rather the one who's most adaptable to change. So the new way to work is to embrace technology. It is all starts with the culture mindset change. So we need to think different and think new. Thank you.
Thank you, Alia, very much for a very lovely presentation that you delivered, especially the importance for us as auditors and accountants to start thinking in a different way using the blockchain. If no one has a question, I would like to ask you a question. Anyone has any question?
Yeah,
I would like to ask you a question. Yes, carry on.
Yeah, go ahead, Doctor. Go ahead.
I would like to ask you, Alia, the issue of blockchain is important, and I can see this is coming. When you mentioned the big three firms that they are using blockchain for analysis, as far as I know, in my limited information that I have on blockchain, although it's something that we started digging around it 7 years ago, and we had a project around it, but no one heard us in this country. The importance of blockchain is to open the channels on each other, to open channels between one blockchain and the other blockchain, this series and the series of information. So there is the public distributed ledger, and there is the private distributed ledger. When we talk about blockchain, and without mentioning whether it's a public distributed ledger, is it the same with the private? Can we manipulate with the private? Although I know manipulation needs the the consent of more than 50% of the owners of the distributed ledger to be able to manipulate. This is number one. My second question to you, Ali, if you don't mind, is I know that we need to start preparing ourselves for the blockchain, and it's a matter of time. But without the companies that are working their accounting using blockchain, we wouldn't be able to start using this important technology to decrease the number of hours we need to make our audit and fulfill our obligations as professional public accountants. Do you agree with me on this or not? Alia?
Actually, the thing is that we cannot say that there will be no tampering, but it is very difficult, right?
Definitely.
Public blockchain are known for their strong security due to decentralization. Every transaction is recorded on multiple computer nodes across the globe. Any attempt to alter a record would require changing it on a majority of nodes, which is nearly infeasible due to the vast size of these networks. Yes, there are attacks. Theoretically, vulnerability is 51% attack if someone or a group gains control of more than half of the computing power on the network. They could potentially manipulate the transaction. However, this is very expensive, unlikely for major public blockchains like Bitcoin. Coming to the private blockchains, centralized control. Private blockchains are permission, meaning only authorized participants can join, while this increases speed and efficiency. It also introduces a central authority. If the central authority is compromised, the ledger could be tampered with. If there is a weak security mechanism, security on private blockchain can also vary depending on the implementation. Some may use less robust cryptography or have a fewer nodes. So in conclusion, both public and private blockchains have some degree of manipulative risk, but for different reasons, public blockchains are more resistant due to their decentralized nature, while private blockchains can be vulnerable if not designed securely. Coming to your second part of question, what I understand is that you're asking those companies which are not using blockchain. That was the question. Can you please clarify again?
The question is, as auditors, if a company is not using the blockchain,
Uh,
and we are using the blockchain. You mentioned the three big companies, EY, KPMG, and maybe Deloitte. If they are using the blockchain and the accounting is not on a blockchain, how can they, how the accounting of the firm that they are auditing or they are providing services is not using this technology? How could they benefit? From my professional point of view, I believe there wouldn't be a benefit. Although I totally agree with you that we need to not to prepare to start using this technology in analyzing any information we receive. But at the same time, we should not overrate it. This is my only concern.
See, obviously, they are using the blockchain, big firms, but all companies are not at the caliber of the main same level. They are mid-size, they are small size, they are large enterprises. For large MNCs, obviously, they can do that software analysis. But there are certain scenarios where there are very small companies which are manually doing like Excel based. They don't have that extensive data. So auditors do not need to perform extensive testing on that company's financial records and controls. Like they can do it manually, invoice reviews, bank statements. But where this is a case that there is an extensive amount of data, then audit firms are using data analytics tools to analyze large data set, identify potential risk or anomalies. This can significantly improve efficiency of their audit and save cost as well.
I totally agree. I totally agree.